Back in 2008, I mean, this was not an international bond, but big investment banks had trouble raising money because everybody, to a lot of people, these were toxic firms. Goldman Sachs was not one of them. So they go to Warren Buffett or to Berkshire Hathaway and they say, we need to borrow $2 billion from you. If you could, that's going to be a big confidence booster to the market. And Warren Buffett says, okay, we'll do it. But this is going to be a convertible bond. While I still hold technically they were preferred shares, but preferred shares are essentially bonds with no maturity. Uh, I will pay you 10% interest. So every year, Warren Buffett was promised interest payments of 200 million. Plus, he had an option to convert them into certain number of stocks. Within a year, Warren Buffett converted them to stocks and got more than $4 billion out of it. But, if things had not improved in Goldman Sachs, he would have collected his 10% until assuming that they were able to pay that. But when things became better, he made a lot more money. So convertible bonds are pretty popular in international markets, especially in the Asian markets. A lot of corporate debt is in convertible form, unless you're one of the big firms. You already have access to credit markets. So small and medium-sized firms that do not have cheap access to credit markets, they actually prefer issuing convertible bonds. And if you know anything about the investment behavior of the East Asian investors, they're more gamblers. I don't know about the Indian market, but I know the Japanese and Chinese and Korean investors. Because when I was in investment banking with derivatives, I did a lot of work with these people. They like these gambles. You know, it's kind of a 0-1 game. If things don't work out, you're not going to earn much on those bonds. If they do, you're going to earn a lot. I had a customer uh, from Taiwan. He was managing the cash of Formosa Plastics, which was basically the largest plastics company in Taiwan. Formosa is another name for the island of Taiwan. And they had $8 billion cash. And this guy had a lot of investment into Russian structures we had, which promised to pay him about 60% interest rates if things didn't go bad in Russia. But if it went bad, he was going to lose at least half of his money. Russia defaulted in early August 98. In July 98, I go to this guy. I said, I can see it coming because we had a lot of inside info coming from Russia. I said, please get this money, unwind these structures, which we're going to mature in October, and put it all in Turkey. Well, I did a big tour for him. I took him to everybody in the Turkish Central Bank, Ministry of Finance. We took him to a lot of entertainment places. This guy was sold about Turkey. He says, as soon as my Russian structures mature, I'm going to put all of that money into Turkey. It was about $250 million. And we would have made close to $20 million out of him because we overcharged these people whenever we could. And I would have made 10% of that as bonus. So to me, there was about at least million, maybe 2 million in bonuses. I could not convince him to unwind it. Of course, August 98, things went crap, he lost over $200 million of to 50. The only reason he was still alive, he was married to boss's daughter. And if you think about it, that's $8 billion. Probably quite a bit of it was triad money. I mean, $8 billion was a lot of money. It's a lot of money even these days. Back in 98, a company with $8 billion cash, you got to have some mob money in there. I mean, it's equivalent to maybe $100 billion in scale these days. I don't know if he's still alive, but those investors do quite a bit. You have also so-called dual currency bonds. Well, the principal is in one currency, interest payments are in another currency. For example, if you issued a bond that is dollar denominated, but you do the coupons in yen, because yen interest rates are lower and stuff like that, they're not that common these days. Uh, let's stop here for today. We'll finish up the chapter on Monday. We will talk about these credit ratings. What do they mean? Should you actually believe them, especially with the sovereign ratings? Because a lot of times there's a lot of bargaining going on with the issuers. For example, there are at least three institutions that issue these ratings: Standard & Poor's, Moody's, and Fitch IPCA. If Standard & Poor's doesn't give me the rating I want, I go to that competitor. For that rating, they get paid. So there are biases in those markets, and we'll talk about those. I'll see you guys Wednesday.